Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. In recent weeks, there has been a slew of announcements on layoffs in the tech sector, mostly globally, but also some bit of news from India. Google was the latest to make such an announcement that would impact 12,000 of its employees. Prior to that, we heard from Amazon with an 18,000 count, Meta 11,000, Microsoft 10,000, and so on. Crunchbase estimates that just in the first 20 days of this month, January 2023, announcements impacting 46,000 jobs were made. The count for all of 2022 was about 107,000. If you're a regular reader of the Hindu newspaper, you'd have noticed that the business page in last Saturday's edition carried 3 articles related to layoffs: Google, Swiggy, and Wipro. Wipro said it planned to lay off 452 employees after they failed an assessment test. Swiggy said it had overhired and hence was laying off. We'll see more of this in the startup section of our conversation. Google chief Sundar Pichai said that the last 2 years the company had seen dramatic growth and that it had hired to match and fuel that kind of growth, while today it faces a different economic reality. What exactly is happening in the world of tech and what should the average Indian tech worker expect? Generally, when an economic slowdown hits the West, technology companies offer really aggressive action on layoffs. You don't see that generally in the Indian context. Here are a few reasons why. Indian IT firms are agile with their hiring plans rather than with layoffs, says Ciel HR CEO and MD Aditya Mishra. Because IT services companies here maintain a bench, they get some lead time in which to react to developments. As bench expands, hiring goes down. Additionally, fear of reputation laws and Indian labor laws that are difficult to navigate are a couple of other reasons why we have not seen such major aggressive layoff announcements from Indian firms historically, says E. Balaji. Balaji is currently Global Chief HR Officer at TVS Supply Chain Solutions, and he also headed manpower placement agency Randstad in an earlier avatar. He also points out that culturally, US companies are comfortable ramping up quickly in terms of employee headcount and ramping down as quickly as and when the situation changes. And considering that labor laws aren't that stringent, it gives them that flexibility. And once they decide, they go in for one deep cut instead of doing it in phases. Mishra of Ciel also points out that flexi staffing penetration is the highest in the world for the US. Of course, what happened in 2008 and 2009 was an exception. Balaji says that the government had said in Parliament that in the wake of the global financial crisis, there were 5 lakh job losses across industries in India. Mishra points out that the pandemic has been deceptive. It gave us the impression that the digital spike we saw during much of the pandemic was here to stay and permanent. That was not the case. Things were hunky-dory in all of 2021 and maybe the first 6 months of 2022. But starting September, tech firms in the US started sensing a slowdown. And you can see these large-scale announcements starting to appear in the last quarter, October to December of 2022. Mishra points out that customers of IT services companies in the banking, retail, hospitality, and pharma spaces started tightening their belts. And this has started showing up in the bench strength of Indian IT services companies. And it surely has. Infosys' utilization, including trainees, declined from 89.2% in September 2021 to 81.7% in December 2022. A rough back-of-the-envelope calculation will tell you if you assume an approximate manpower base of 3 lakh people for the company, a 7.5% change means that roughly 22,500 people have come onto the bench from active projects. In a call with analysts, Chief Financial Officer for Infosys Nilanjan Roy said that the December metric was one of the lowest utilization rates Infosys had seen. The inference here is that, in other words, a company pays salaries to more people who are not earning revenue on billable projects now than 5 quarters ago. Similarly, Wipro's utilization rates slid from 78.1% in September 2021 to 72.3%. With an employee base that is currently close to about 2.6 lakh, it's easy to do the math. Because IT services companies spend the most on manpower, a rising bench strength is obviously not welcome. So companies have tended to slow the pace of net headcount addition. The data that you see on your screen right now tells you that TCS, Tata Consultancy Services, which is India's largest IT services firm, has actually had a decline in headcount, which is a first in quite a while. Compare this with about 25,000 heads added in the first 6 months ended September for the company. Wipro too saw a decline in headcount in the quarter ended December. Compare this with an addition of more than 15,000 people in the April-June quarter of 2022. Infosys has also tempered addition from more than 20,000 added at the end of the June quarter to about 1,000 at the end of December. To give us a 9-month perspective, Kamal Karanth, co-founder ex-Fino, a specialist staffing firm, says that the drop in talent action is significant in the expansion hiring category, noting that there are only 83,000 net additions in the IT sector compared with 1.63 lakh in the same period last year. Just to give context, companies either lose people and replace them, that's replacement hiring, or you expand your net headcount base, that's expansion hiring. What else do Indian IT services companies typically do to rein in costs? Balaji says that apart from slower hiring, the appraisal process for those employees inside the companies would get tighter, so increments would be lower and slower. Onboarding of candidates who have been given offer letters may be delayed, and in past slowdowns we've noticed especially candidates from colleges who've been placed through campus placements. They may have offer letters but without a date of joining, and sometimes from the time they get an offer after their interview process is over, it may be between 12 and 15 months by the time they get their actual date of joining. So this is something that's been historically common in the Indian context. But these changes, Balaji points out, won't be highly overt or cause large headlines, because he says that companies recognize that when the tide turns for the better, they still need to be seen as sought-after firms. What trends are placement agencies seeing? Mishra of Ciel points out that resumes from candidates who are actively seeking a change has gone down 25% just between September and December. From an overall industry perspective, Karanth of ex-Fino says that this drop is about 30 to 35% in terms of movement among companies from a year earlier. On the other hand, with global tech majors announcing such large layoff plans, their Indian arms may be affected too. Ciel HR anticipates about 10 to 20% more resumes from such employees who wish to enter the job market. The accompanying slide tells you that attrition levels for TCS have actually stabilized in the last 2 quarters, and while for Infosys and Wipro, they've declined since Q1. But even then, for all three, the attrition level is well above 20%, which means that for a specific company, within a year, 1/5 of the manpower base is in churn. So how come attrition levels are high while the general job market is said to be slowing? Mishra says that Ciel still finds it difficult to find good resumes in full stack, data science, cloud, and infrastructure. IT services companies have been feeding each other's attrition and replacement hiring action, says Karanth. Exchange of talent within the top 4 bellwethers has clocked a total of 4.14 lakh gross movements in 3 quarters. Take a while to digest those numbers. He says that attrition levels may dip in the near term but will still be higher than historically low levels. Why? Because newer companies are still being set up in India, either in the form of capability centers of global tech majors or just Indian companies blossoming afresh. He points out that in 2022, 54 greenfield tech companies had been set up in Indian soil, and their first preference shopping for manpower is Indian IT services firms. Professionals, especially with experience in the range of 6 to 12 years and with certain niche skills, are in demand. So much so that such techies continue to decline 30% of active offers. So much for IT services firms, but why are mature stage startups too laying off staff? Swiggy announced last week that it would lay off 380 people even as the CEO admitted to the error of overhiring. Go Mechanic said it had overstated financials and hence has to cut costs. It will let go of 70% of its 1,000-strong workforce. Late last year, Byju's, the edtech firm, laid off about 2,500 people in a restructuring exercise. Ciel's Mishra highlights the fact that startups typically project certain achievements, milestones, and based on these projections, they line up some costs for manpower, technology, or infrastructure. But now that these projections have not been met for various reasons, either domestic or global environment, investors are not that patient. They are urging cost cutting, so there is an obvious impact on people across functions, sales, customer service, technology development, and so on. He says that venture capitalists normally wait till an idea, and this need not be just the entire enterprise, but even projects within a certain startup business. They typically wait till the idea succeeds or till that portion of the business closes. Now, even midway, if certain projections have not been met, they ask entrepreneurs to stop funding those initiatives. He says that if war, inflation, and recession had not happened, investors would have continued to back these projects. Now, patience is running low. What lies ahead? Mishra says he does not anticipate a tsunami of layoffs coming up in the Indian IT services sector, and Indian arms of global tech majors will be back in due time. Karant also points out that the macroeconomic outlook shows Indian IT services companies standing to benefit from global shakeups, if anything. With a recovery in sight within the year, he says, Indian IT companies will only shift to lower gear on headcount growth. Large-scale layoffs will make it expensive for the sector when rehiring and training will be required. The sector typically operates with a long-term bearing of 2 to 3 years, so they would choose minor nips and tucks in adjusting the talent base. On the startup sector, Karant is as sanguine. He says it takes only a quarter or two of stability for the startup sector to bounce back. He also points out that it's important to note the transactions that early stage startups had seen during 2022. He says that early stage startups saw 20% more transaction deals in terms of count and 51% more value than in 2021. So hopefully a significant portion of that is waiting to be invested, part of that in manpower as well. What has your own experience been? Do you know of anyone who suffered a layoff in the IT services industry? And has it been easy to find positions in other parts of the sector? Leave your comments below. That's all we have for now this week. Till we meet again, have a lovely week ahead.